oil, then hitting oil futures. The next one is COMEX gold futures. Okay, COMEX gold futures is the biggest gold futures market in the world. Very high liquidity. Alright, if you know how to play gold, this is the best market. Alright. Then besides COMEX gold futures, COMEX silver futures. Okay, financial product like the Hang Seng Index futures, mini Hang Seng Index, the H-shares Index futures in Hong Kong, and the Nikkei 225 Index futures. All these products are accessible through OPF. Alright, through their brokerage service. Then, since we are talking about OPF, what they can offer. First of all, these are COMEX gold futures. Who trades gold in this room? Show me some hands. Already some hands only. Show me more hands. Who trades gold in this room? Any gold? Spot gold, gold bullion, gold coins. Huh? What? Oh, bracelet. Oh, okay. So long as gold, but don't get the plated gold, okay? I mean, it's real gold. Okay, you look at this gold price. I just do a quick one. The recent top is 1430 in the cash market. In COMEX gold futures, the high was 1432.5. Slightly a bit premium, but it doesn't matter. I just want to show you, based on this formation, can you see a double top? Okay? In America, they call head and shoulder. That means you got one head, you got this shoulder, you got this shoulder. Correct? Okay, in Japan, they call the Buddha top. That means the king crown. Okay? Once you see this formation, chances is the market will start to drop and do a very quick correction, which is what I'm looking now. Last night, the gold price went down to a low of 1352 and rebound back up to about 1368 and close. Alright? This 1 to 2 weeks, I foresee it will be range bound between 1350 to 1390. Okay, 1350 to 1390. After the ding dong, there will be another last leg down to complete the whole correction. This last leg down, okay, I expect, but I may be wrong because sometimes it depends on fundamentals. I will explain to you how. Okay? If after the correction finish between 1350 to 1390, once the market start to do the last leg down, my ideal price is 1294 to 1300 per hour. Okay? This have to be finished before the mid-February. Okay? The whole correction will finish. Alright? Why I said I may be wrong? Because this is based on my technical studies, which is normally quite accurate, trust me. If not, I won't be going to so many countries to pick up. But what will happen if I become wrong is when fundamentals come out to disturb the market. Okay, how? Fundamentals, that means if US, alright, were to weaken the dollar again in January or February, or to keep talking about QE3, scare the market. So once the dollar weaken and drop, gold price will go up. Correct? Commodities go up, just now I explained to you guys. So when that happens, there is a big chance for the gold prices to turn up. But where it's going to be bottom and turn up, I'm not too sure. It could be anywhere from 1350. But if within these 2 months, US is going to shut up, the market will do a very good, healthy, proper correction down to 1300. Okay? But take my point, this 1300 target price have to be finished before mid-February. Alright? Which is very ideal to my time frame calculation. Don't ask me how, just copy down. But when that happens, in mid-February, when you see 1300, you go in and buy gold based on your long-term portfolio. I can almost guarantee you will make money. Why? Because last year after the Dubai crisis happened, the gold prices were very sharp fall. I calculated it was 2 months, 9 weeks. Okay, finish very fast and start to work. So this round, I would think this correction is also 9 to 10 weeks. Okay, and last year when the market dropped after Dubai crisis, the whole wave it dropped down 50%. So this round, I take 50% is 1294. I'll put it 1003. Okay, the one-third correction, which was at 1340, okay, is already very near. The last low was 1352. All right, so which means the ideal time to buy gold is middle next month or even end of February, whatever, around that period. Okay, how you can invest in gold? Number one is, if you have an OPF account, okay, trade gold futures. Buy a long term, using small margin. If you know how to manage. If you don't know, come to my workshop. I got no workshop already. My master's workshop. Okay, that's the first way. Second way is buy gold mining stock during the price at the middle of next month. Alright? The third way is buy gold bullion and keep, but it will cost you a lot of money. Alright? But whatever it is, enter in the gold instrument. Because if you miss that 1,300, if I happen to be correct, you will never see this price anymore. Because going into end of this year, or 2012, now it's 2011, I'm talking about 2012, I always live in the future. We are going to look at gold price hitting 1550. Okay? But then again, 1,300 to 1,500, you only make $200 per ounce. But you know, if you invest in gold stock, wow, you can make 100% growth. Really, that's true, by historical record. Alright? So this is gold price, COMEX gold futures. Okay, the other one is CPO futures in Bursa, Malaysia. Okay, look at this. This is very steep, right? Only got one correction here and started to walk all the way to the top. Alright? CPO always tracks behind crude oil prices. Crude oil prices, as they go up to 95, CPO is also going up very high. Okay, crude oil price and gold price always move in line with each other. So when when gold price, as I said, until mid-February, there's a big chance of doing correction, provided US don't open the mouth. Okay, no weakening of dollar policy is emphasized. Once gold prices move down to 1,300, finish the correction, crude price will have a big chance from this current $90 will move back down to about $75, $76. Then it will come up again. But eventually, I'm looking crude price to hit 100. So who is very big high in this room? Change to average size. If not, you're going to pay a lot of money for control. Okay? So when crude price within the next 1 month is going to finish correction to the bottom, CPO price will definitely as well move into correction, which is 1/3 range, 3,330 ringgit. Tonight first price. What do you make now? 3330. Hey, don't pay. What time at Kuching I was doing this? Really? I think that's right. I forgot what number. Okay. So take note of this. Then you see this, the last high benchmark was 3750, right? This top, right? Market now has already go higher than this. How you can take the benchmark is anytime within this 1 month, once you see the CPO price start to fall below 3750 futures, this is the beginning of the market sell down. Okay, once it breaks down below 3750, it will start to consolidate, then followed by another drop which will bring you back to 3330. Okay, 3,330 ringgit. But all this have to happen by end of February. That means we've got about 2 months, 6 weeks to 7 weeks. Alright, for this thing to happen. But once you see CPO coming to the bottom at about 3,330, gold is also at 1,300. It's the time you should really consider, okay, buying CPO, buying gold price. Because inflation is coming. Alright? Now let's take a look at KLCI. Hey, who is trading in this KLCI futures in this way? Not so many, Okay, let's take a look at this futures index. Okay, now, my question is very simple. Imagine you don't know anything, you just look at this chart. And I'm telling you, since 1 year ago, March 2000, since 1 year ago, 2009, 2 years ago here, now it's 20. Okay, since March 2009, the market started to recover, no correction. Small correction, not even 1/3. Then after that, this part. This 940 billion tax healthcare reform by Obama is forever, I remember. All the market are saying, U-turn go up. That's why people said, do you think Obama is good? Say, useless guy. But of course, I go US, I cannot say this. Only in Singapore, Malaysia. The market reverse went up. It has actually surpassed the pre-crisis high. The pre-crisis high was 1530, right? Or 1535, around there. Yeah, but The high recently went up to 157.